why the market being up just feels wrong, right? The market's up. We see that. The headlines are positive, but I'm just not buying it. And here's why. It's what we talked about in January. I'm going to do a quick recap. And the data is actually a little bit worse now. So we're going to go through this one by one. Credit card debt. Credit card debt. Look at this. All-time high. This is not just a blip. This is not just household crisis. You kind of can't tariff your way out of this one either. This is years of inflation, wages not keeping up, and now people are floating their lives on credit cards. It's not just excessive spending. It's just floating your day to day. Government debt, 36 trillion plus in national debt. That's again climbing as well. So you can cut spending here, you can cut spending there, and I'm for that. But long term, this is nothing you're going to hear in the headlines going to fix this unless we get some things. It's the start of fixing, but it's not going to do anything right now. Student loans, student loan debt, again, no short-term fix. These aren't just big numbers. They're like pressure cookers underneath the surface of the economy, right? Because that generation is going to be stepping into their wage earning and they're burdened with the student debt. So cost of living has outpaced wages. And guess what? If wages rise, it just fuels more inflation. So now we're stuck in this kind of no-win scenario. But the biggest part that no one really thinks of is AI job loss. So self-checkouts, robots, automation. The scariest part, everyone's using it, but no one's paying attention to it. I trust the robot more to take my order than the person at the counter. And that's a problem because jobs are being replaced, not shifted, eliminated. And the new ones, they're not coming fast enough. They will come, but it also takes time. So I think we're going to have a blip of unemployment. We've already had a negative GDP quarter. That's not a glitch. That's just the start of something. And it's not economic, it's more structural. So here's what really matters in all of this. Your actual tax burden. If I'm paying 30% in taxes and you save billions from fraud or tariffs and you save 10% of that, but I'm still paying 30%, I got nothing. So yeah, the market might be rallying, but if AI is taking job, wages are flat, debt's through the roof, and we're still getting taxed to death, this isn't really a recovery yet. That little blip in the stock market wasn't it. We're going to have a little bit more pain to get through. I do believe the future is bright, but we can't go from here to here. We're going to have a period where we settle back down and kind of reevaluate to get to the next level the right way. So I have charts, I have data. This is where we put our stuff from. We don't watch the headlines. We watch the news and we kind of make our own decisions. But the other thing I said, unemployment. Keep an eye on that unemployment because as that starts to creep up, that's going to be one of those factors that everyone's looking over here, but unemployment is starting to creep up. And these are the things that are going to start catching. So see you guys soon.